Hello traders, welcome to your Follow the Bots S&P 500 Daily Market Recap, sponsored by Zaner. Since 1980, Zaner has been helping futures, commodity, and forex traders trade smarter, faster, and easier.
Hello traders, Bill Duryea here with Follow the Bots. Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Monday, September 16th, 2013. Overnight, during Sunday's Globex session, S&P futures auctioned up to retest the prior multi-year high at or near 1705. The initial retest of the multi-year high completes the recovery rally through the upper trading cluster. Back in late August and early September, when the S&P auctioned below 1670 and traded down to 1624, the market built a base of support and new long positions were accumulated at the low. Last week, when the S&P broke above 1670, we alerted our listeners that the S&P was on the path to auction back to the multi-year high ahead of this week's FOMC session. Last week, the S&P traded up to 1685. However, during last week's trading session, the market had to deal with the rollover from the September contract into the forward-looking December contract. We mentioned on last Thursday that often rollover was a two-day affair. On Friday, the S&P pulled back modestly, once again trading down at or near 1674, but failed to auction back above the prior high at 1685. The breakout above last week's high occurred during Sunday's Globex session. The financial media attributed the breakout that occurred over the weekend to the withdrawal of Larry Summers as a potential candidate to replace Chairman Bernanke. We noted in Sunday's market commentary as well as in Monday's daily briefing that the likely reaction to the initial retest of the multi-year high would be a sell response. Despite the fact that today's market breadth looked extremely bullish, with the majority of the S&P components trading above their previous day's close, and 9 out of 10 S&P sectors posting gains for the day. As the market structure indicates, market participants took advantage of the overnight gap to sell into the rally. At today's open, the S&P had already pulled back modestly below the overnight high. During the open, the S&P auctioned up before pulling back to the midpoint of the developing trading range at or near 1692. There was an initial buy reaction to the pullback, and the S&P traded back up to 1698. But failed to rally back up to the opening range high. Into Monday's close, the selling pressure continued, and the S&P trickled down below the high, auctioning down to 1688. The pullback to 1688 fails to fill the gap at Friday's close, nor does it provide a retest of last week's high at 1684. Ideally, we would like to see the S&P pull back and retest the prior high and fill the gap at Friday's close. The reason we would like to see the market development occur in this way is that a pullback to Friday's close and or last week's high would provide the ideal test of support. It would give previous sellers an opportunity to exit their short positions, as well as encourage buyers who observed the S&P auction back up to the multi-year high to have an opportunity to get aboard the up move prior to the FOMC announcement. Should the market stall here at Monday's low, 1688, and attempt to auction back to the high, we would not necessarily see that as a bullish development. The rationale behind that statement is that since the S&P broke out above 1670, the pullbacks have been very modest, and the majority of the up moves have occurred in the overnight session. Volume has also been light as a result of this form of market development, and therefore there is not a great deal of commitment in the current up move. The up move falls more into the category of short covering, and today's sell-off into the close indicates that the sellers are still dominant up at the multi-year high. As we've been noting over the past week, recent releases in U.S. economic data have fallen below expectation. Today, the Empire State of New York released its manufacturing data, which was also below expectation. Market participants have been speculating that due to the weak economic performance, the Fed may take a more moderate approach when it comes to tapering its accommodative monetary policy. In the event that during the FOMC announcement, the Federal Reserve's forward guidance indicates what has been dubbed as tapering light, the market may continue to retest the high and extend the trading range modestly higher. The only scenario under which we can conceive of the S&P rallying substantially above the multi-year high would be if the Fed held back from any form of tapering whatsoever. Should the tapering be more significant than the modest cutback of $10 billion from the bond purchasing program that many analysts speculate, our expectation would be that the initial market response will be negative. If by chance, although it's not expected, there is any language in the Fed's forward guidance that indicates it tends to increase the Fed's funds rate, we would expect the market reaction to be extremely negative. Market participants appear to have taken some solace from the fact that Larry Summers withdrew his name from the prospective list of replacements for Fed Chairman Bernanke, and that the likelihood is, although a new nominee has yet to be announced, that when Bernanke retires from his current position as chairman of the Federal Reserve, the next Fed chairman will share Bernanke's accommodative monetary perspective. Coming into Tuesday's session, minor support exists down at last week's high at 1684 on the odd chance that the S&P holds support at today's low, 1689, and attempts to auction back up to today's intraday high at 1698 without providing an opportunity for new capital to enter the market at a relatively more favorable trade location. We would expect to see the selling pressure continue if the market attempts to trade back up to the multi-year high. However, should S&P futures pull back and fill the gap at Friday's close and spend just a modest amount of time at or near 1684 and 1682, and thus provide buyers an opportunity to accumulate a position prior to auctioning back to the high, we would then expect to see the S&P auction back up to the multi-year high at 1704, 1705, and possibly extend the range modestly higher. That concludes our daily recap for the S&P 500 E-mini for this Monday, September 16th. If you would like to follow our real-time market commentary, we invite you to visit us on the web at www.followthebots.com. Log on and join us some morning at the open.
For more information regarding Zayner's brokerage services or the content of this broadcast, contact Neil Rogers, nrogers@zayner.com, 312-277-0135. This is Cuerva from Follow the Bots. Happy trading.